Market Mind Games, A Radical Psychology of Investing, Trading, and Risk by Denise Shull, book summary in English. Welcome back to Power Books, where we dive deep into the minds behind market mastery. Ever feel like your emotions are secretly sabotaging your trades? Or that the rational investor model just doesn't quite fit the chaotic reality of the markets? This time, we're tackling a truly insightful and, dare I say, radical take on trading psychology with Denise Shull's Market Mind Games, A Radical Psychology of Investing, Trading, and Risk. Get ready to throw out the old playbook on emotions and discover how your feelings are not the enemy, but crucial data in navigating the market. We'll be unpacking Shull's powerful insights into how our brains truly process risk, why fear and greed are just the tip of the iceberg, and how understanding the market's emotional ecosystem can give you a significant edge. If you're ready to unlock a deeper level of self-awareness and transform your trading from a battle against your emotions to a collaboration with them, you're in the right place. So, buckle up as we explore the fascinating intersection of neuroscience, psychology, and the unpredictable world of finance. And if you're new to Power Books, make sure to subscribe for more mind-expanding reads that can empower your financial journey. Chapter 1. The Myth of the Rational Actor. In this opening chapter, Denise Shull immediately challenges the long-held economic assumption of the rational actor, the idea that individuals make investment and trading decisions based purely on logic and objective analysis of available information. Shull argues that this model is fundamentally flawed when applied to the complexities and uncertainties of the market. She introduces the concept that emotions are not simply noise or biases that need to be eliminated, but rather integral and informative components of the decision-making process. Drawing on neuroscience and psychology, Shull explains how our brains are wired to respond emotionally to risk and uncertainty, and how these feelings significantly influence our perceptions and actions in the market. The chapter sets the stage for the book's central thesis: to understand and leverage our emotions, rather than trying to suppress them, is key to developing a more realistic and effective approach to investing and trading. Key takeaways. The traditional economic model of the rational actor is an inaccurate representation of how people make decisions in the market. Emotions are not just biases, but are fundamental and informative aspects of our decision-making process. Neuroscience and psychology reveal that our brains are wired to respond emotionally to risk and uncertainty. These emotional responses significantly shape our perceptions and actions in the market. The book will explore how understanding and leveraging emotions can lead to a more effective trading and investing approach. Trying to eliminate emotions from trading and investing is unrealistic and potentially detrimental. This chapter lays the groundwork for a radical psychology that embraces the role of emotions in market behavior. Chapter 2. Your Brain on Risk. In this chapter, Denise Shull delves into the neurobiological underpinnings of how our brains process risk. She explains that risk isn't a purely intellectual concept, but triggers primal emotional responses within us. Shull discusses key areas of the brain, such as the amygdala, involved in fear and emotional processing, and the prefrontal cortex, responsible for higher-level reasoning and decision-making, and how they interact when we face uncertainty in the market. She highlights that our initial reactions to risk are often fast, intuitive, and emotionally driven, stemming from our evolutionary need for survival. While the prefrontal cortex can attempt to override these emotional responses with logical analysis, it's not always successful, especially under pressure or when faced with significant uncertainty. The chapter emphasizes that understanding this interplay between our emotional and rational brain is crucial for recognizing our inherent biases and developing strategies to navigate risk more effectively in trading and investing. Key takeaways. Risk triggers primal emotional responses in our brains, not just intellectual calculations. The amygdala, fear and emotion, and the prefrontal cortex, reasoning and decision-making, interact when facing market risk. Our initial reactions to risk are often fast, intuitive, and emotionally driven due to evolutionary factors. The prefrontal cortex can attempt to override emotional responses, but isn't always successful. Understanding the interplay between our emotional and rational brain is key to recognizing biases. Developing strategies to navigate risk effectively requires awareness of these neurobiological processes. This chapter provides a foundational understanding of how our brains are wired to respond to the inherent uncertainties of the market. Chapter 3: The Feeling Brain. In this chapter, Denise Shull elaborates on the crucial role of emotions in our cognitive processes, particularly in the context of trading and investing. She challenges the traditional view that emotions are separate from and often detrimental to rational thought. Instead, Shull argues that feelings are a vital source of information, providing us with rapid assessments and motivations that can be highly relevant in dynamic and uncertain environments like the market. She discusses how emotions such as fear, greed, excitement, and regret are not simply irrational impulses, but carry valuable data about our perceptions, beliefs, and the potential outcomes we anticipate. The chapter emphasizes that by learning to recognize, understand, and interpret our feelings effectively, traders and investors can gain a deeper insight into their own biases and the underlying psychological forces driving their decisions, ultimately leading to more informed and nuanced actions. Key takeaways: emotions are not separate from, but are integral to our cognitive processes, including decision-making in the market. Feelings are a vital source of information, providing rapid assessments and motivations. Emotions like fear, greed, excitement, and regret carry valuable data about our perceptions and anticipated outcomes. Learning to recognize, understand, and interpret our feelings effectively is crucial for traders and investors. This self-awareness can provide deeper insights into personal biases and the psychological forces influencing decisions. By understanding our feeling brain, we can move towards more informed and nuanced actions in the market. This chapter reinforces the idea that embracing and understanding emotions, rather than suppressing them, is key to better market psychology. Chapter 4: Beyond Fear and Greed. In this chapter, Denise Shull moves beyond the simplistic and often overused dichotomy of fear and greed as the sole drivers of market behavior. She argues that while these are certainly powerful emotions, the psychological landscape of trading and investing is far more nuanced and complex. Shull explores a wider spectrum of emotions that significantly influence our decisions, such as hope, regret, envy, excitement, frustration, and confidence, or lack thereof. She emphasizes that each of these emotions carries specific information and can manifest in distinct behavioral patterns in the market. By focusing solely on fear and greed, traders and investors may overlook other critical emotional states that are impacting their judgment and actions. The chapter encourages a more granular and sophisticated understanding of the emotional ecosystem, recognizing the subtle but powerful influence of a broader range of feelings on market participation and outcomes. Key takeaways: the fear and greed dichotomy is an oversimplification of the emotional drivers in the market. A wider spectrum of emotions, including hope, regret, envy, excitement, and frustration, significantly influence trading and investing decisions. Each emotion carries specific information and can lead to distinct behavioral patterns. Focusing solely on fear and greed can cause traders to overlook other critical emotional states. A more granular and sophisticated understanding of the emotional ecosystem is necessary. Recognizing the subtle but powerful influence of a broader range of feelings is crucial for navigating the market effectively. This chapter encourages a more nuanced approach to understanding the psychological forces at play beyond just the basic emotions of fear and greed. Chapter 5: The Emotional Ecosystem of the Market. In this chapter, Denise Shull expands on the idea that the market itself can be viewed as an emotional ecosystem, a dynamic and interconnected environment where the collective feelings, beliefs, and expectations of all participants interact and influence price action. She explains that individual emotions are not isolated events, but rather contribute to and are influenced by the prevailing emotional tone of the market. Shull discusses how phenomena like herd behavior, panic selling, and irrational exuberance emerge from this collective emotional landscape. She emphasizes that understanding this ecosystem is crucial for traders and investors because it provides context for price movements that may not always be explained by fundamental analysis alone. By recognizing the dominant emotions at play and how they are shifting, individuals can gain a better sense of market sentiment and potentially anticipate changes in trend or volatility. The chapter underscores the importance of being aware of one's own emotional responses within this broader market psychology and avoiding getting swept away by the prevailing sentiment. Key takeaways. The market can be viewed as an emotional ecosystem where collective feelings influence price action. Individual emotions contribute to and are influenced by the prevailing emotional tone of the market. Phenomena like herd behavior, panic selling, and irrational exuberance emerge from this collective psychology. Understanding this emotional ecosystem provides context for price movements beyond fundamentals. Recognizing dominant and shifting market emotions can help anticipate changes in trend or volatility. It's crucial to be aware of one's own emotional responses within this broader market psychology. Traders and investors should strive to avoid getting swept away by the prevailing market sentiment. Chapter 6. Knowing what you know and what you don't. In this chapter, Denise Shull tackles the critical issue of self-awareness regarding our knowledge and beliefs in the context of trading and investing. She emphasizes the importance of accurately assessing what we truly know with certainty versus what are assumptions, opinions, or probabilities. Shull discusses the dangers of overconfidence stemming from past successes or a belief in one's own analytical abilities, which can lead to taking on excessive risk or ignoring contradictory information. Conversely, she also addresses the paralysis that can arise from excessive doubt and a fear of being wrong, preventing potentially profitable actions. The chapter encourages traders and investors to cultivate a realistic and nuanced understanding of their own knowledge base, to be honest about the limits of their certainty, and to operate within a framework of probabilities rather than absolutes. Recognizing the difference between what we know and what we don't know is presented as a cornerstone of sound decision-making and effective risk management in the inherently uncertain environment of the market. Accurately assessing what we truly know versus assumptions is crucial in trading and investing. Overconfidence, often stemming from past success, can lead to excessive risk-taking and ignoring contrary information. Excessive doubt and fear of being wrong can lead to paralysis and missed opportunities. Cultivating a realistic understanding of one's knowledge base is essential. Traders and investors should be honest about the limits of their certainty. Operating within a framework of probabilities rather than absolutes is key to navigating market uncertainty. Recognizing the difference between what we know and what we don't know is fundamental for sound decision-making and risk management. Chapter 7. The stories we tell ourselves and why they matter. In this chapter, Denise Shull explores the powerful influence of narratives and interpretations on our perceptions and decisions in the market. She argues that as humans, we are natural storytellers, constantly creating explanations and frameworks to make sense of the often chaotic and unpredictable price movements. These stories can range from simple justifications for a trade to elaborate theories about market behavior. Shull emphasizes that while these narratives can provide a sense of understanding and control, they can also be significant sources of bias and can lead us to selectively interpret information to fit our pre-existing beliefs. The chapter highlights the importance of being aware of the stories we are constructing about the market and our positions, and to critically evaluate their validity. Recognizing the potential pitfalls of getting too attached to our narratives is presented as crucial for maintaining objectivity and adapting to changing market conditions. Key takeaways. Humans are natural storytellers, constantly creating narratives to understand market movements. These stories can provide a sense of control, but can also be significant sources of bias. We tend to selectively interpret information to fit our pre-existing beliefs and narratives. It's crucial to be aware of the stories we are constructing about the market and our trades. Critically evaluating the validity of our narratives is essential for maintaining objectivity. Getting too attached to our stories can hinder our ability to adapt to changing market conditions. Recognizing the influence of our internal narratives is a key aspect of developing better market psychology. Chapter 8: The Power of Attention. In this chapter, Denise Shull focuses on the critical role of attention in navigating the complexities of the market. She argues that where we direct our mental focus significantly influences what information we perceive, how we interpret it, and ultimately the decisions we make. Shull discusses how various factors, including our emotional states, biases, and pre-existing beliefs, can selectively filter our attention, causing us to miss crucial data or overemphasize irrelevant information. She highlights the challenge of maintaining focused and objective attention in the face of market noise, volatility, and our own internal psychological pressures. The chapter emphasizes the importance of cultivating mindful attention, a state of present moment awareness without judgment, as a way to become more attuned to the actual market dynamics and to avoid being swayed by distractions or our own internal mind games. Developing the ability to consciously direct and sustain our attention is presented as a key skill for improving trading and investment performance. Key takeaways: where we direct our attention significantly influences our perception, interpretation, and decisions in the market. Emotional states, biases, and pre-existing beliefs can selectively filter our attention, leading to missed or overemphasized information. Maintaining focused and objective attention amidst market noise and internal pressures is a challenge. Cultivating mindful attention, present moment awareness without judgment, can improve our attunement to market dynamics. Mindful attention helps avoid being swayed by distractions or internal mind games. Developing the ability to consciously direct and sustain attention is a key skill for better trading and investing performance. Chapter 9: Decisions Under Pressure. In this chapter, Denise Shull examines how the high-stakes and often time-sensitive nature of trading and investing significantly impacts our decision-making processes. She explains that pressure can amplify our existing biases and emotional tendencies, often leading to impulsive actions and deviations from our planned strategies. Shull discusses how the fear of missing out, FOMO, the urgency to recoup losses, and the anxiety of watching profits erode can cloud our judgment and trigger fight-or-flight responses that are detrimental to rational decision-making. The chapter emphasizes the importance of developing coping mechanisms and mental strategies to manage pressure effectively. This includes practicing emotional regulation techniques, pre-planning responses to various market scenarios, and cultivating a sense of calm and focus even in volatile conditions. Learning to make sound decisions under pressure is presented as a crucial skill for long-term success in the market. Takeaways: the high stakes and time-sensitive nature of trading amplifies biases and emotional tendencies. Pressure can lead to impulsive actions and deviations from planned strategies. FOMO, the urgency to recover losses, and the anxiety of losing profits impair judgment. Developing coping mechanisms and mental strategies is essential for managing pressure. Practicing emotional regulation techniques helps maintain composure. Pre-planning responses to various market scenarios reduces reactive behavior. Cultivating calm and focus in volatile conditions is crucial for sound decision-making under pressure. Chapter 10: The Social Animal in the Market. In this chapter, Denise Shull explores the significant influence of social factors and the behavior of the crowd on individual trading and investing decisions. She highlights that humans are inherently social beings, and this social wiring extends into our market participation. Shull discusses how herd behavior, the tendency to follow the actions and opinions of a larger group, can override individual analysis and lead to both market bubbles and crashes. She examines the power of social proof, where we look to others for validation and guidance, and how this can be exploited or can unintentionally lead us astray in the market. The chapter also touches upon the impact of news, social media, and the opinions of influential figures on market sentiment and individual choices. Shull emphasizes the importance of being aware of these social forces and cultivating an independent mindset to avoid being blindly swept up by the crowd's emotions and potentially irrational actions. Key takeaways. Social factors and crowd behavior significantly influence individual trading and investing decisions. Herd behavior, the tendency to follow the group, can override individual analysis and contribute to market extremes. Social proof, seeking validation from others, can lead us astray in the market. News, social media, and influential opinions impact market sentiment and individual choices. Being aware of these social forces is crucial for making independent decisions. Cultivating an independent mindset helps avoid being blindly swept up by the crowd's emotions. Understanding our inherent social tendencies in the market is key to more rational decision-making. Chapter 11, The Illusion of Control. In this chapter, Denise Shull delves into the pervasive psychological bias known as the illusion of control, our tendency to overestimate the degree to which we can influence events, particularly in inherently uncertain environments like the market. She explains how our desire for predictability and order can lead us to believe we have more control over market outcomes than we actually do. This illusion can manifest in various ways, such as attributing success solely to our skill while downplaying the role of luck, or believing that meticulous analysis can eliminate all risk. Shull discusses the dangers of this bias, including overtrading, taking on excessive risk, and becoming overly attached to our predictions. The chapter emphasizes the importance of recognizing the inherent randomness and unpredictability of the market and cultivating a more realistic sense of what we can and cannot control. Focusing on controllable factors, such as our trading process, risk management, and emotional responses, is presented as a more effective approach than chasing the illusion of controlling market outcomes. Key takeaways. The illusion of control is our tendency to overestimate our ability to influence market events. Our desire for predictability can lead us to believe we have more control than we do. This illusion can manifest as attributing success solely to skill and believing analysis eliminates all risk. Dangers of this bias include overtrading and excessive risk-taking. Recognizing the inherent randomness and unpredictability of the market is crucial. Cultivating a realistic sense of what we can and cannot control is important. Focusing on controllable factors like process, risk management, and emotional responses is more effective. Chapter 12, Cultivating Emotional Agility. In this chapter, Denise Shull shifts the focus from simply understanding our emotions to actively developing emotional agility, the ability to experience our emotions without letting them dictate our actions in the market. She argues that suppressing or trying to eliminate negative emotions is often counterproductive. Instead, Shull advocates for learning to recognize, label, accept, and then adapt to our feelings in a way that aligns with our trading plan and long-term goals. She introduces practical techniques for fostering this agility, such as mindfulness practices, cognitive reframing, and developing a greater self-awareness of our emotional triggers and patterns. The chapter emphasizes that by becoming more flexible and resilient in our emotional responses, we can reduce impulsivity, make more rational decisions under pressure, and ultimately improve our trading performance and overall well-being as market participants. Key takeaways. Emotional agility is the ability to experience emotions without letting them dictate actions. Suppressing emotions is often counterproductive. Acceptance and adaptation are key. Cultivating emotional agility involves recognizing, labeling, accepting, and adapting to feelings. Techniques for fostering agility include mindfulness and cognitive reframing. Greater self-awareness of emotional triggers and patterns is crucial. Emotional agility reduces impulsivity and promotes more rational decisions under pressure. Developing this skill improves trading performance and overall well-being. Chapter 13, Building Your Mental Edge. In this chapter, Denise Shull synthesizes the concepts discussed throughout the book to provide a framework for actively building your mental edge in the challenging world of trading and investing. She emphasizes that a true edge isn't solely about having a superior trading system or analytical skills, but also about cultivating a resilient, adaptable, and emotionally intelligent mindset. Shull revisits the importance of self-awareness, understanding our emotional triggers and biases, and developing strategies to manage them effectively. She underscores the need for continuous learning and self-reflection, treating trading as an ongoing process of experimentation and refinement. The chapter also highlights the significance of developing a strong sense of self-efficacy and confidence, grounded in realistic self-assessment and consistent adherence to a well-defined trading plan. Ultimately, building a mental edge is presented as a holistic endeavor that integrates psychological understanding with practical trading skills to achieve sustainable success. Key takeaways: a true trading edge involves a resilient, adaptable, and emotionally intelligent mindset, not just systems or analysis. Self-awareness, understanding emotional triggers and biases, and managing them are crucial. Continuous learning, self-reflection, and treating trading as experimentation are essential. Developing self-efficacy and confidence based on realistic assessment and a plan is important. Building a mental edge is a holistic process integrating psychology and practical skills. This mental edge is key to achieving sustainable success in the market. Chapter 14, The Radical Investor. In this concluding chapter, Denise Shull brings together the core principles of her radical psychology of investing and trading, outlining the characteristics of what she terms the radical investor. This individual embraces the inherent uncertainty and emotionality of the market rather than trying to deny or suppress them. The radical investor possesses a deep self-awareness, understanding their own psychological makeup and tendencies. They are comfortable with discomfort, able to acknowledge and process a full range of emotions without letting them derail their strategy. They prioritize process over outcome, focusing on consistent execution of their plan and effective risk management, rather than being solely driven by profit targets. The radical investor is adaptable and willing to learn from their experiences, viewing mistakes as opportunities for growth. Ultimately, Shull presents the radical investor as someone who has integrated their psychological understanding with their trading methodology, leading to a more sustainable, resilient, and ultimately successful approach to navigating the complexities of the market. Key takeaways: the radical investor embraces market uncertainty and emotionality. They possess deep self-awareness of their psychological tendencies. They are comfortable with discomfort and process emotions without derailment. They prioritize process and risk management over solely focusing on profit. They are adaptable and learn from their experiences, viewing mistakes as growth opportunities. The radical investor integrates psychological understanding with trading methodology. This integration leads to a more sustainable, resilient, and successful approach to the market. This concludes our summary of Denise Shull's Market Mind Games, a radical psychology of investing, trading, and risk. This book offers a compelling perspective on the crucial role of emotions in trading and investing, moving beyond simplistic models and advocating for a deeper understanding and integration of our psychological landscape. And that wraps up our exploration of Denise Shull's Market Mind Games. I hope you're walking away with a fresh perspective on the power of your emotions in the trading arena. Remember, it's not about eliminating your feelings, but about understanding and harnessing them to make smarter, more informed decisions. What were your biggest takeaways from Shull's radical insights? Let us know in the comments below. And if you found this deep dive into trading psychology truly eye-opening and you're ready to take your understanding to the next level, I highly recommend picking up the full version of Market Mind Games. Denise Shull goes into far greater detail, providing actionable strategies and deeper explorations that can significantly impact your trading success. You'll find a link to purchase the book in the description below. It's a game changer for anyone serious about mastering the mental side of the markets. Don't forget to subscribe to PowerBooks for more thought-provoking explorations of the books that can transform your financial life. Until next time, keep learning, keep growing, and keep trading mindfully.